I knew that some people were going to get really rich with pushing capital the right direction. And it's my firm belief that for the next 10 years, that's in the hard asset and hard asset adjacent sectors. 12, 13 years, gold was just dismissed as an investment class. So was silver. The miners absolutely crushed. And a lot of those majors, yeah, they've run quite a lot, Agnico, Newmont, but relative to the price of gold, you could say they're valued cheaper than they were a year ago. And the big shift in the mining sector, Vin, that's occurred over the last 12 months has been a brand new investor at the table. What inning are we in? We're not even in the major leagues yet. That's honestly how I feel.
Today I'm joined by Jay Martin to break down where precious metals may be headed next, how gold is starting to play a role in the digital financial system, and why mining equities remain one of the most misunderstood opportunities if you're willing to think long term. Good day, everyone. It's Vin Maru from Financial Liberties, and I have a special guest on. His name is Jay Martin, and him and his family, I think, had ran the Vancouver Resource Investment Conference. Back then it was Cambridge House. And I met Jay about 12 years ago, and I had a chance to even speak at his conferences a couple of times. And now that I'm back covering the commodities and the digital financial world, the new era we're entering into, I really wanted to have Jay come on. He's got an amazing YouTube channel, and I highly encourage everyone check it out. It's called The Jay Martin Show. He's got over 250,000 subscribers, and you've done over 2,000 videos, which is very impressive, Jay. So why not take a minute, introduce yourself, kind of quick background, and we'll just jump right into it.
Yeah, sounds good, Vin. It's great to reconnect with you, man. Yeah, really good to hear from you and reconnect. And congrats on the show. Very, very exciting. So, yeah, my background is in the commodity sector primarily. I ran a series of investment conferences for about a decade, and we pivoted into a couple other media properties about 5 years ago. And so, we create content that helps investors find opportunities mainly in the mining sector because I'm a mining investor. And so, we honestly, Vin, like when we launched the media business 5 years ago, the podcast brands, it was really like the world was on fire. I knew that some people were going to get really rich with pushing capital the right direction. Let's start a podcast that helps uncover where the smartest money is going at that time. And that just kind of kept rolling, and it was very self-serving at the time. It was like, I want to know where the smartest money I know is going right now. And just for my personal portfolio, we just published the episodes and it kind of took off. And that's still the thesis though. Everybody on the team at VRIC Media is the name of the business these days, is an investor first, but we create content for other retail investors looking for the smartest home for their cash. And it's my firm belief that for the next 10 years, that's in the hard asset and hard asset adjacent sectors.
Yeah, I agree with you. It's exciting because I was covering the metals and the commodity sector in general back when we first met. And I just started covering it again in the last couple of years, actively talking about it. Um, but I'm also in the firm belief that we're entering this whole new transformation in the financial system. Like we're now hearing about tokenization of assets. All real world assets are going to get tokenized, and that's coming. That's already starting this year. And I firmly believe, and I even said that back 10 years ago when I learned about Bitcoin through a mutual friend, Jeff Berwick, when it was under $10, that if they had backed that or a digital currency with gold, I would have been all in on it because back then I was a gold bug and I still am to this day. So it's exciting to see this world that we're entering into. And I personally believe everything is going to get digitized and tokenized, and it'll be stable coins or similar that will be used to transfer funds around the world. And I firmly believe commodities is going to be playing a big part of that new economy. And that's really the focus I'm taking with the channel is covering commodities again, but just the whole financial rails that are going to be in place for this new digital economy or digital finance economy, let alone I keep hearing about quantum finance coming on later on down the road. And that's where I think it's going to run everything. So I really love to get your thoughts on that later, but let's just jump into the commodities itself. We've seen a great rise in the price of precious metals. Nearly more than doubling, and silver's just been on fire. So you've done a lot of interviews with a lot of experts and very knowledgeable yourself. So I'd love to get your thoughts on where we are in this commodities bull cycle that probably started about 2 years ago, I would say.
Yeah, I mean, I feel like we're in a precious metals bull market right now, and I don't know if a general commodities market has really emerged yet. To be quite honest with you, there's definitely some metals that are ripping. Copper looks very good, but nickel doesn't, oil doesn't. There's many very important commodities that haven't caught a bid yet, and I believe it's only a matter of time because we've literally starved those industries of capital for 15 years, and or 20. And eventually that supply deficit's going to catch up as it's beginning to now with copper. But gold and silver have been on an absolute tear. And you can feel two ways about it, Vin. And I hear both from subscribers and guests on the show and all of this. Some feel like we're just getting started, early innings, and others feel like the industry is already getting a bit hot and it's probably going to cool off soon. And a couple comments on that. It's funny, right? When you have a bear market for 15 years, like we've had in the precious metal sector, or 13 years, investors literally forget what a good market feels like. They forgot because they're so used to being hated for so long. For 12, 13 years, gold was just dismissed as an investment class. So was silver. The miners absolutely crushed. And over a decade of that really hammers into somebody's brain and how they understand the market to perform. And so when you start getting a bit of mainstream media attention and generalist investors showing up in the sector, it can feel a bit weird. Like, oh my gosh, it's getting too hot right now, right? These people are showing up. It's a bit frothy. But to me, that's more of just, it's like PTSD from the last 12 years more than it is the market actually getting over its skis. And if I think about, and I'm in mining aggressively for my portfolio, but not exclusively, right? I'm in health science, I'm in nutrition, I'm in a lot of the sort of like health adjacent sectors as well. It's just a passion of mine, and I like to invest in that area. So I'm in a lot of generalist investment groups, WhatsApp clubs, signal groups, all this stuff. And when it comes to the generalist investors that I connect with, the frequency with which any of them even mention gold or silver as an idea is so minimal that it tells me we're still very, I don't even know like what inning are we in? We're not even in the major leagues yet. That's honestly how I feel. And you look at the price of silver, it's gotten super hot. Yeah, I probably wouldn't buy silver today at these prices, but I bought a lot of it over the last 15 years. So
Yeah.
my position is different. If you're taking a 5, 10 year time horizon, then maybe today's prices are still cheap. They probably are, right? So it all comes down to like, what's your time horizon and your goal with anything that you're buying. And the gold thesis in general, just for like really, to get back to basics, was floated by the central banks in 2022 when they began accumulating gold in larger amounts than we've seen in 40 years, right? And this was the first serious bid onto the gold price that was about 3 years ago. And after that, we saw maybe 8 to 12 months later, we saw the best in class royalty companies begin to catch a bid. And then 8 to 12 months after that, the best in class miners
Yeah.
began to catch a bid. And the trickle of capital from the hard asset to the best in class, most stable businesses and ongoing down the food chain has been so like patient and logical that this strikes me as like an incredibly textbook gold market. And as long as the assumptions that inspired that initial gold purchase trend from central banks, which was we believe that the US dollar will not be worth as much in the future as it is today. And we believe that US geopolitical strategy will be less certain in the future than it is today. That was what inspired central banks to de risk from US dollars. As long as those two assumptions are still true, the gold thesis is still intact. And I happen to believe those two assumptions are still true.
I agree with you. And I think another thing also was with Russia going into Ukraine and then their assets getting seized, that really kind of a lit a fire. Okay, like we've got to diversify out of the dollar or get assets into something that we have full control over. Because if you do have money in the banks and you've seen what happened there, I think that could be kind of a reoccurring theme. So that's one of the other reasons why I believe central banks have been net long buyers
Oh,
over
yeah.
a couple of years. And I really
100%.
don't see, and I don't see the geopolitical risks diminishing at any time in the near future. I mean, if anything, it seems like it's getting worse. So you have that. I just heard something about Trump announcing a $1.5 trillion military budget spend. So they're going to inflate the dollar away, essentially. I mean, there's no way of paying that off, but which
Hmm.
is why I actually believe, they also came out with the idea of stable coins. We'll talk about that in a bit, but yeah, I kind of believe that we are in the early innings of this, yet the metals have run up so much. It wouldn't surprise me if we saw a bit of a pullback, a consolidation period, and then something of a catalyst to just take it off. And the one thing I've noticed is, yet there is a lot of interest in it, but we don't see the average person in this space talking about the junior miner that's on fire. And when you see that, then you can almost say, all right, we might be close to the top of the market. And the other thing I think is we really, we do talk about the debasement of the dollar, but we haven't seen a currency crisis yet. So I think those things will be coming in the whatever time frame, 5, 7, 8 years, whatever it is. But once you start to see that and the metals go parabolic, then I could say, yeah, I think we're at a blow off top phase. I'm out. But until then, I'm starting to see capital come into even now. The mid-sized producers, even the juniors are catching a bid on raising some capital and they've taken off. And when I start to see that, I kind of get excited because that's the wheelhouse that I enjoyed was the more of the small mid-cap producers and the junior exploration companies and providing coverage on that, which now I'm going to be doing. So yeah, I kind of agree with you, Jay.
Yeah, and it's funny. I completely agree that the big catalyst for the contemporary distrust in the dollar was the confiscation of those US dollar assets because the reason central banks hold US dollars is because it's consensus that that's the safest asset to own. And when you send a message to the world that says, we can take that away from you if we see fit, and it is up to our discretion, that puts a big question mark behind that safe asset, right? And that just absolutely changed the game. I think you're 100% right. And when we reflect back on that event 10, 20 years into the future, I believe we'll see that as a catalyst, a major one when the world changed. And time will tell. But I think you're absolutely right. And that was the big harbinger.
Absolutely. So I'd like to pivot a little bit and get into uh, the discussion of everyone says buy physical metals, and I recommend everyone have some physical metals. I trade paper trade on ETFs with the metal price and stuff like that. But I am hearing a lot about tokenization of real world assets. And I believe there are some already tokens out there for physical backed gold. And I think that is going to be a big trend coming up. And it might, people are adverse to the idea, and I butt heads with some people on it, but I actually am for it. And for the following reason, it's liquidity. If you have a bar of gold or metals, um, you have to find a buyer for it. Now you can go to the bullion dealers or whatnot, but if you had this digital gold and it's backed at a vault, audited, and even getting it in allocated form, then I think I think we're going to see an investor class, especially this younger generation, that may be apt to looking at that, especially if they were crypto investors and now they want to diversify into the metals. Well, they may exchange their crypto into a stable coin and then buy a metals backed digital asset. And so this is where I think the future is going. Have you heard of uh, this kind of happening or the excitement around it from the other analysts or people you've spoken to?
Yeah, there's a handful of companies that are putting together business models on exactly that mission for sure, because they recognize that what matters for precious metals for the next generation of investors is access, ease, speed, 24 hours. Like this is how markets have to function. And I think once we see a few systems that provide the amount of trust required, they will probably be the vehicle of choice for the majority of at least new gold and silver investors. Because quite frankly, buying physical is annoying, right? Like I prefer to take physical, but it's annoying, right? It's you have to have it delivered, you have to store it somewhere. It's a bit of a thing, and it's super liquid, sure. It's the most liquid asset on the planet. It's a great option on cash, but liquidating it also is kind of annoying, right? You have to take it somewhere. I live in a town that's small, right? 30,000 people up in the mountains. I have to take it to the city. You know what I mean? So it's a bit of a hassle, but because for me at this point in my life, Vin, it's a buy only asset and it's not something I plan on selling in my lifetime. I mean, that's the idea, right? Is that, I hope to leave my gold to my children. That's the game plan. And I don't buy physical silver, right? I have a bunch from back in the day, but I like the silver equities. I like the physical gold as just generally speaking. But yeah, we'll see. I've seen so many of these models, Vin, of tokenizing commodities, tokenizing gold, and most of them are garbage, but we're starting to see some good ones, and eventually we'll see a few winners for sure.
I think so, and I believe there are a couple that I've already spoken to and talking about it. Um, I wrote a report back 12 years ago on how to internationalize precious metals and that. And I even spoke with some of the biggest bullion dealers and vaulting facilities about the whole idea of tokenizing these things. This is when, the Bitcoin narrative was just starting. They seemed pretty apprehensive at the time. But if you get someone like GBI or Hard Asset Alliance, which is a pretty big organization, and they white label their stuff, if you see companies like that doing it, I think there'd be a little more trust level because they've been around for so long. But if you've got someone that's a brand new player in the precious metal space, doesn't know anything about the bullion industry itself, coming out with a tokenized gold or silver, yeah, I would be kind of questioning it
Yeah.
and I wouldn't agree with it. But
Totally. And there are some reputable, you mentioned Hard Asset Alliance, World Gold Council being another. There's a company called StreamX funded by Frank Giustra in Vancouver, the Fiore Group. And so you're absolutely right. Like we'll get there to the credible platforms. I haven't seen them yet, but they're definitely emerging today. I completely agree.
yeah, I think it's going to be a transition period. It's not going to happen overnight. So I wouldn't go out and jump out and buy these digital gold assets right now. But once these stable coins get established and more people are used to digital wallets and that digital money system, now they're talking about tokenizing all securities. So all stocks will eventually get tokenized. As that transition happens, then I think we're going to start to see more acceptance of digital gold. Until then, you're going to have the diehard gold bug saying, no, I want physical, and that's it. And I own my physical. I haven't sold any of it. I don't plan to anytime soon. But I am very intrigued with this whole digital financial space and model that we're entering into. So, yeah, it's something I'm going to be paying attention to and start covering those companies and, obviously looking for the winners in that space before I do any solid recommendation on trusting any of them. But for now, I'm happy with the metals, the ETFs, trading some options or whatnot, and the miners. So maybe we can kind of just pivot right back into the mining space. Uh, Vancouver Resource Investment Conference, and now your media company specialized in a lot of the mining companies itself. What are your thoughts and what are you hearing on the street in terms of some of these juniors and exploration plays? Obviously, seniors have had a great run. Um, do you see capital coming into the space? A lot of interest in those plays right now?
I do. And the reason I think that will continue is because banks, all over Toronto are still using, I think, $3,200 gold as their sort of benchmark for earnings forecasts. So if you're lining up your predictions and forecasts and expectations of earnings reports on a price of 3,200 gold and gold's trading at $4,000, you're set up to outperform quite nicely. And although we are seeing a lot of institutional money begin to arrive at the sector, a lot of these shops, they need to see, 8 quarters of positive earnings, increasingly positive earnings before they'll really hear the mandate from their shareholders to start allocating capital. And so we're just getting down that path now. And a lot of those majors, yeah, they've run quite a lot, Agnico, Newmont, but relative to the price of gold, you could say they're valued cheaper than they were a year ago. Their prices run up, but their earnings have gone parabolic. And so yeah, they look more expensive, but on a value to asset basis, they're not. When it comes to the juniors, it's a different game, and it's definitely a lot easier for these companies to raise cash right now. So there's a lot more companies getting to work and drilling and pushing projects forward. Pros and cons to that, to be honest, Vin. I love a bit of a tougher market. You said when the juniors start to catch a bid and the price goes up, you get excited. I get anxious, to be honest with you, because
Right.
I know where it goes. I know that it's important to fund good companies, but when companies get funded, a lot of bad ones do too. And they burn up shareholder dollars, they tarnish the reputation of the industry. And that's part of it, right? It's a high risk business. There's no easy way to raise cash and find gold. Like it's a tough business. So a lot of companies will not perform over the long term. Uh, but it's nice to see capital arrive back in the sector. And right now, I'd say, yeah, the majors have caught a bid. The funded developers are getting a lot of respect from the market right now. The unfunded developers are beginning to. And anything earlier than that, from my seat, it's like the exploration companies that have either begun to uncover a world-class asset, they're catching a bid, or those with world-class management teams that are just getting launched right now, they're catching a bid as well. Underneath that, I'm not seeing a lot of activity, and that's a good sign. You want to see good companies get rewarded and poor companies not, right? And that's where the market's at right now. It's kind of a sweet spot. So, quite frankly, I love it.
Yeah, same with me. I like the development companies that either have projects in play and they're doing expansions, they're either doing extra production or, extra thousands of tons, or like you said, with the exploration plays, the proper management team, the proper jurisdiction, well funded, and who helped them with their financing. I've seen several companies where Sprott had put his own personal money in. And so if I see big name investors who've been in the resource space for a long time and they're putting capital into these exploration or smaller juniors, it gives me a little more comfort level to invest alongside those. The pie in the sky new companies that are just starting up or a new jurisdiction, it's not something I really want to touch now. Maybe in the future when you get that frothy market, but even then, if you can choose quality management, quality projects, I would say if you're going to speculate in that junior market or the exploration market, that's kind of where you want to focus on.
100%. And the big shift in the mining sector, Vin, that's occurred over the last 12 months has been a brand new investor at the table. And this is the US government. That's what we've seen over the last 12 months is that various departments of the US government are actively investing cash, not subsidies or loans or tax breaks or incentives, but money and becoming shareholders of US mining companies. The Department of Defense is now the largest shareholder of MP Materials. They've taken a 5% stake in US antimony, 10% in Lithium Americas, 10% in Trilogy Metals, the project up in Alaska. And this is new. And it's a big shift. And you know, as an entrepreneur, as a capitalist and a free market entrepreneur, I don't love the government in my business, right? I'd prefer this did not occur, but they're not going to call and ask my opinion. It's what's going to happen. This is the new trend, right? And we're going to see more of it. And we're going to see more of it outside of America. That's what I believe. And that does change. I mean, what you said is when you see these big institutions begin to arrive at the table and write checks, it gives you confidence because it creates a bit of a base, right? A base of capital that you can then build on top of. And there's a similar phenomenon happening right now with government cash. And this is the only way that the US can foreseeably achieve any kind of reindustrialization is by aggressively funding these companies themselves because for so long they vilified all those same companies, right? For the last 15 years, anything near the extraction industry wasn't incentivized. It was demonized, right? It was demonized by every politician who wanted to get elected and every media company who wanted a headline to get some action. And as a consequence, investors hated it. It was a toxic industry because people were scared to go against such a strong headwind. When you're hated by politicians and media, it's not a good place to be, right? That tide has shifted. And now mining is loved by politicians and media are finding new ways to sell it. They're not saying mining's important again. They're saying this is a matter of national security, right? That's the way it's being spun. And that's a massive shift in the wind. And I'm same page. This is a huge tailwind to investors, and you just have to be careful. I don't think that they're going to make good investment decisions, by the way. I don't think the government's suddenly going to become intelligent allocators of capital. The project under MP Materials has already gone bankrupt twice. Like it might go, I don't know that they're going to make the best choices. I don't think they will, but that's not the point. The point is that we're now in an industry that is favored by policy. You saw after they wrote the check into the Trilogy Metals project in Alaska, the next step was to coordinate the Bureau of Land Management to get that road built. The problem with that asset in Alaska was access. It was a great asset. You just couldn't get there outside of a boat or an airplane. And under the Biden administration, they blocked that access road. So it kind of took the whole thing offline. But after the check was written, I think it was a $15 million check, Vancouver company, project in Alaska. The Bureau of Land Management got behind the project and coordinated this road. Will now be built, right? Multi-billion dollar road. So that's why I call them the new activist investor, because they're not just providing capital, they're providing regulatory leverage as well. And that's a big shift. That's a big shift. So if you're looking at projects in the mining sector that are favorable to American national security, I think that's the new way to think about jurisdictional risk. Are you on side or off side of the American interests? And if you're on side, there's a tailwind for you right now. And that's a different way to think about this business.
Oh, I 100% agree, especially when, I'm sorry, especially when we've seen a lot of metals being on the critical minerals list now
Yeah,
and getting
60,
back,
up
yeah,
from 35 only 7 years ago. It's like, give
and
it a couple more
silver's
years,
on it.
and the whole periodic table be on there in another
Yeah,
5 years.
silver's on it. Well, we got a few minutes left. I think Canada, I'm kind of concerned about because they're not doing any. I mean, I'm starting to hear some talk about Mark Carney supporting the oil industry, talking about the pipelines. But it's a bit of a nightmare. I do like the US market. I'm in Mexico, so I'm also taking a bit of a focus on the Mexican mining space to do some coverage on here. Um, yeah, I think we're into some exciting times. When I first got involved in the metal space was 2005, got to ride that wave up, then the 0809 crash. I kind of think if I had to guess, I think we're in maybe the second or third inning on this whole thing. So I'm looking forward to the next 3 to 5 years. Now, I suspect again, like if we get this pullback and the miners will pull back, they've already had a good run up. But my suspicion is that pullback and that basing, once you see it go flat for a while, that's probably going to be the optimal time to start picking away and start positioning yourself if you have not put any money into the space yet. And we will get that next wave up soon.
Yeah, yeah. And again, I encourage people to think about time horizon because if you're looking for a 6 month trade, then do your best. Very few people can actually time the market and time swings like that. Like so few people that when they can do it successfully for a long period of time, they become household names. That's how few, right? Most cash is generated, and all of my mentors in this business who made material generational wealth did it from investing with a 5 year time horizon. So even if the metals are overpriced right now, if the equities are, maybe they are, but you don't know. You won't know, right? So you have to step back and say, what's my macro thesis and what's that time horizon? And that will allow you, if you get clear on that, it's so important. It's the most important thing a value investor can do because inevitably you're going to get timing wrong sometimes. You're going to think the market corrected, but you're wrong. It only corrected 20% of the 40% it was going to. And so you feel really dumb and scared right after that correction occurs because you're down on your position. But if you're down on a 4 to 8 month time period and your investment time horizon is 5 years, what are you sweating exactly? Right? You're betting on an outcome 5 years down the road, not the short term volatility that's inevitable along the way, not just because there's always volatility in the mining sector because of various supply and demand fundamentals and mostly because traders get in and they overbuy and they oversell and they overbuy and they oversell. So inside of a long-term trend, there's short-term volatility. But if you're clear on your time horizon, it's a lot easier to withstand those bumps.
Wow, wise words. Thank you, Jay. I'm gonna link your YouTube channel in the description. I highly encourage everyone to follow Jay. He's got a great channel, lots of interviews. And Jay, I'd love to circle back with you sometime in the near future. Continue on with this conversation. I think there's a lot we can unpack on various other topics. But yeah, thank you for coming on.
Vin, pleasure's all mine. Yeah, great to see you, man.
This is a long-term conversation about hard assets, not a short-term trade. If you're thinking about precious metals, mining equities, and how real assets fit into the financial system, let me know in the comments what you're focused on and why.